This is Craig Haugard with your Financial Issues Ag Update. Well, demand destruction is the main story in corn right now. Ethanol production for the week ending April 3rd was just 672,000 barrels a day. That was a reduction of 33% compared to the same period a year ago. Last week, the USDA lowered its estimate of corn used to produce ethanol by 375 million bushels, dropped it down to 5.05 billion bushels. There's some private analysts out there that believe that corn used for ethanol could end up being as low as 4.7 billion bushels. The speed at which our economy is allowed to gear back up will have a huge impact on corn supplies and prices this year. The other issue to keep an eye on is the development of Brazil's second crop corn. This year's crop has experienced widespread dryness over the past 30 days. With pollination taking place later this month and throughout May, Brazilian farmers are going to desperately need some timely rains. As I record this, the overnight spot corn futures are trading unchanged. In soybeans, we need to keep an eye on export demand as well as domestic crush margins. Last week's USDA report reduced exports by 50 million bushels due to strong competition coming out of Brazil. Crush margins remain strong, as indicated by the USDA projecting a 20 million bushel increase in crush. In the overnight trade, spot futures are trading unchanged. The world of wheat will keep an eye on Russia and portions of Europe where weather problems could impact production levels. Traders are also going to look for usage trends. Last week's USDA report increased the world carryout by 5.6 million metric tons, thanks to reduced usage in both China and India. In the overnight trade, Chicago is 6 cents higher, Kansas City is up 7, and Minneapolis is trading 4 cents higher. Last week's USDA report showed cotton stocks swelling from 5.1 in last month's report to 6.7 this month. Virtually all of that increase in stocks was due to a reduction in the projected export number. In the overnight trade, spot futures are trading 87 points lower. In the livestock markets, keep an eye on slaughter pace. The daily cattle slaughter pace was off 12 to 15% from normal. Well, hogs will get hit hard this week with the closing of the Smithfield plants. The story is still being written, however, and increased media attention on the coronavirus cases in slaughter plants probably isn't going to be positive for chain speed estimates going forward. That could keep livestock prices under some pressure. In dairy markets, the week-over-week prices for cheese and butter were both lower as the impact of restaurant and school closings continues to decimate the dairy industry. In the overnight trade, though, we do have spot futures trading 11 points higher. Cash livestock markets actually were stronger on Friday. Choice beef boxes were $1.26 higher as they closed at $223.93, while selects were up 76 cents to close at $208.33. Pork carcass values were $1.78 higher as they settle out the week at $52.85 per hundredweight. This has been Craig Haugard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.